we've identified this unique opportunity of becoming a sector-specific venture fund, focusing on the area that Brazil is by far the most globally competitive, the most science-driven, and the most entrepreneurial-minded, which is agriculture. Brazil is going to become one of the most sophisticated agriculture financing models. This has merged with what I believe is the most sophisticated fintech ecosystem in the world. We have more than 8 billion people on the planet. And I think more important than sustainable agriculture is being able to guarantee food security.
What's the single biggest mistake you see investors making when they try to invest in sustainable agriculture?
The biggest issue, Scott, is that...
Chico, it's great to finally connect with you. Thanks for coming on the show with me today.
Scott, it's mutual. Thank you so much.
Before we dive into the agri-food tech platform that you've built at SP Ventures, I want to start with something that must have shaped everything for you. You grew up across 3 continents and in 10 different cities. That's not normal for most people. Most people grow up in one place, maybe 2. So you must have been constantly uprooted and having to adapt to different places, new languages. Tell me all about that experience and why was this happening and how did that shape who you are today?
I owe that to my father. My dad was in the Brazilian State Department, the Itamaraty, for almost 50 years. He was a seasoned diplomat, and he was a Brazilian ambassador in multiple OSINT missions. And especially when I was in my earlier years, I used to accompany him on these trips, and these missions abroad. So I had the opportunity of living in several different places. I lived in the U.S. and in more than one city, in New York and in Washington, D.C., I lived in Singapore, I lived in Spain, and of course, I lived in Brasília, the capital of Brazil, which is a very cosmopolitan, multicultural, mid-sized town, because of course, you have representatives not only from every single country that has an embassy over there, but you have all the multilaterals as well, expats. I grew up very immersed in different cultures and learning things all the time and having to adapt all the time, and that has definitely shaped me. I have enormous gratitude to my dad's career.
So 3 continents, you were in South America, North America. Where else did you live?
Europe and Asia. Singapore is one of the most fascinating places I've had the honor of living. The majority of the population is ethnic Chinese. It's a country that in half a century has completely transformed itself from a third world swamp into one of the wealthiest nations in the world. So you can see that this kind of development and transformation is very possible. And there's a recipe for doing it, which is hard work, focus on public policies that deliver results, and it has become a melting pot of Asia. So even though most of the population is ethnic Chinese, it's very diversified within China, but you also have a whole range of other ethnicities from Asia. It's a country with very strict laws, and where you see that people are extremely satisfied with the trade-off of a little bit more government control or presence in exchange for a lot of prosperity and in exchange for safety. So that was a major impact in my life. And another great impact in my life was in Spain, which is in many cases a direct opposite. Spain is also an extraordinary location. Besides having the honor of learning Spanish, also having a very deep dive into Spanish culture, history, as a Brazilian and Latin American, whom all of our continent was colonized by the Iberian Peninsula, whether from Portugal or from Spain, understanding the roots of how Spain became a sovereign nation, the language, the different cultural characteristics of the Iberian Peninsula, not only Portugal, but you have Galicia, you have Asturias, you have the Basque Country. And in Latin America, you see all of these different cultures kind of merged and integrated with African and indigenous population. And of course, a very open society, a very democratic society, and also a society that went through a major transformation in the last 50 years. The transition in multiple cases, Spain transitioned from a dictatorship under Francisco Franco, who passed away in 1975, and transitioned it with the monarchy then to a parliamentary democracy. But then they had another very important transition, was going into the European Union and then into a major path for prosperity. And that's another thing that deeply impacted me, was seeing the first generations of this post-prosperity, post-democratic period, and was also incredible, besides learning the language and of course the food and the wine, which in Spain is absolutely incredible. And then of course, probably the experience that most shaped me, I spent 5 years of my elementary education in New York City, where my father was the consul general in the 80s to the early 90s. And then I spent a year in high school where my dad was also serving in Washington, D.C. I have to admit, deeply identify and admire what America stands for. I believe deeply in American exceptionalism. And I think I chose to dedicate my life, my entrepreneurial and business career to an industry, an activity that was born, created, shaped within the United States, which is venture capital, of course, in many regards because of this experience. Very different systems, very different cultures, very different set of values. I think it gave me a lot of adaptation skills.
That's quite an advantageous upbringing to absorb that worldview just by being there, as we all are when we're growing up. I'm sure the international schools have sometimes 100 and some countries represented in them.
In Brazil, yes, because it was important to keep the international curriculum. But in the other places, not necessarily. For example, in New York, the 5 years that I was there, I went to a public school, PS24, in North Bronx, a very nice neighborhood. And it was incredible because the diversity of the people. I mean, of course, there were a lot of Latin American, Hispanic origin, but at the time, there was a lot of immigrants from the former Yugoslavia and multiple other ethnicities, right? And then in Washington, D.C., I went to a prep school. In Brasilia, yes, I went to an international school, which was great and also very diversified. But in each country, I had a very different academic and intellectual experience. That was, I think, also very important.
And then in 1998, you went to St. Louis University to study business administration, and I guess with a focus on finance and international business. How did you come around to picking St. Louis University, and what were you thinking at the time about what kind of career you wanted to build?
Remember, in 1998, I had really lived many years in the United States, and my dad at the time was working at the Brazilian State Department, and he was the Assistant Secretary of State for European Affairs. He was very engaged with all the European negotiations, investments, and most people don't know this, but Brazil until 1992, 1993, we had just come back to democracy, but we were an economic basket case. Most of the economy was public state-owned, whether we're talking about steel, mining, aerospace, banking, etc. There was very little fiscal control. We had hyperinflation, one of the worst cases of inflation in the world. And then we started a very serious program under then 1993 Minister of Finance, Fernando Henrique Cardoso, and then he became the president in 1994. And this program included privatization. It included exchange rate stabilization, fiscal responsibility, and multiple other things, including a semi-independent central bank that had inflation targeting characteristics and in focus, right? So all these things came in about a 6, 7, 8-year period. When that started to occur, Brazil started to open up for FDI. And Spain became the number one foreign direct investor in Brazil during those last 3 years of my high school. They invested in telecoms. Telefonica became the number one player in Brazilian telecommunications. They invested heavily in banking. Santander came on to become one of the biggest banks in Brazil, still private banks acquiring public assets, but most of the other ones as well, like PPVA, etc. I was having a lot of conversations with my father. What should I do? Should I study in Brazil? Should I go to the United States? Or should I try something else? And once again, my father was very instrumental in influencing me here. He said, well, I think that you can never lose your connection to the U.S. because of everything the U.S. stands for. But at the same time, I think that you would gain tremendous insights and perspectives if you happen to spend a couple of years in Spain. Besides learning language, culture, but also understanding the economics, the politics, and really building up a network, etc. So I started to look at what was the basics of going to university in Spain. I was having a U.S. high school diploma that is not the right fit, so I would have to get an additional diploma fit to go to a Spanish university. And then I found that the St. Louis University, which is a centenarian Jesuit university, private university from the Midwest of the United States, they had a campus in Madrid. So I applied to St. Louis University, to the business school department, got accepted, applied to the Spain campus, and I went there originally for 1 year. Ended up becoming 2, ended up becoming 3. Spain, I have to admit, was probably the 3 best years of my life. The Spaniards, one thing that is undeniable is that they definitely know how to enjoy life a lot more than most of the other people on the planet.
So then you got out around 2002, and then you started your professional career at Banco Santos in Sao Paulo. So walk me through what you were doing there.
Taking one step back, 1 year before that, when I was already in St. Louis, I had already had all the fun that I was supposed to have in undergrad. So I was just very focused on studying, working, and getting serious in life. I started to read and really become passionate about finance. I read many of the books, a whole Michael Lewis library, and I started to fall in love with finance and thought, okay, this is something that I want to start. At the same time, 2001, 2002 was a rough year in the US, right? We had September 11, we had the busting of the dot-com bubble. And at the same time, I felt that going back to Brazil and having a couple of years of experience in the Brazilian financial markets, an emerging market that was very up and coming, great prospects in the long run, was going to be in addition to my learning. I had spent a very significant amount of my time outside of Brazil. So going back to Brazil, and especially going back to Sao Paulo, which is the financial capital market of Latin America, which is the human capital, the innovation, the logistics hub of Latin America, was something that I saw as definitely very important to be able to deepen my roots and to have a specialization and understand Brazilian business, Brazilian economics, and how things work out. So I decided to come back when I graduated, and I decided to work in finance. I started to apply to most of the trainee or junior analyst programs. So I started to apply everywhere. And after a couple of months and going through multiple selection processes, interviews, all these case study programs and taking tests, etc., I was given an offer from a mid-sized Brazilian bank that was growing very fast, founded by a very well-known entrepreneur in Brazil at the time called Edemar Cid Ferreira. And it was a bank that was focused on segment of the economy, which we call mid-market, which is around between 30 million reais at the time until 500 million reais in revenues, which would probably be somewhere between exchange rate of the time, $15 million all the way to $100 million in revenues. They had just structured a trainee program in partnership with one of the leading Brazilian business school universities called Fundação Getúlio Vargas, where they selected 15 very high potential kids from the leading Brazilian universities. And there was, I think, 2 or 3 kids that came from universities from abroad. And we would spend 2 years going through multiple departments in the bank, working in sales, working in asset management, working in investment banking across the board. Also rotating, going into classrooms, so having a specific focus training comes through in economics, banking regulation, and banking products, and banking innovation across the board. And that we would join the bank into a very high-flying career path. It was the first trainee program of the bank. It was exciting. So I decided to accept, and that's how I joined Banco Santos as a trainee. And that's where I spent the next, I believe, 2.5 years.
You went through this training program, and then after that, you left and went to Fama Investimentos to work in hedge fund sales, right?
Exactly. So right after the 2-year finish of the training program, I was offered a position in a bank to become a junior sales manager, and I accepted. So I transitioned from the training program to become a junior sales manager. And then a couple of months after that, there started to be a lot of rumors in Brazil about the solidity of the bank, of Banco Santos. And the rumors started to get heavy. A lot of money started to leave the bank. I became very concerned because at the time I was living in Sao Paulo on a very tight budget. If the bank went under, or if something happened, if I got fired, I wouldn't be able to pay more than 2 months rent. I needed to start looking for something else in case something happened. And then I received a very interesting proposal to become a junior analyst in Fama Investimentos, which at the time was a fairly young hedge fund, had been around for a few years, founded by 2 entrepreneurs straight out of college to do value investing in small cap Brazilian companies and very focused on being able to implement governance. So even though they took minority positions, of course, and in public equity companies, the companies are relatively small, very low liquidity, very little analyst coverage. So there's a lot of asymmetry of information. There's a lot of opportunity to be able to explore lack of information that has been priced efficiently by the public markets. With relatively small positions, you can still be relevant on the cap table of these companies. So you can eventually get a position on a fiscal board, one of their governance areas, and exert pressure on the majority-controlled equity ownership of these companies. And they were doing really well. So I decided to accept, and that was a very good move because 2 weeks after I accepted, the central bank intervened in Banco Santos, and Banco Santos went on to be liquidated.
You at some point have described your years in traditional finance and hedge funds as working from the dark side. That's kind of a loaded phrase. What did you see in that world that made you feel that way?
One highlight about Fama, which I think deeply impacted me and which I have enormous gratitude because that was probably one of the most consequential professional experiences in terms of shaping my decision to eventually becoming an entrepreneur in the venture capitalist space. First of all, Fama had a very strong entrepreneurial DNA. The 2 founders were in their early 30s, Mauricio and Fabio Alterovic. They were there. They managed the company as a startup, bootstrapped, imprinted their values on the day-to-day. That was my first experience in a startup environment. Second, a startup in financial services in emerging markets such as Brazil that performed very well, which kind of broke a paradigm that I had, that financial markets were the big sharks. It's difficult to come in as a new entrant. Our information is priced, markets are efficient. And these guys kind of proved the opposite, especially in an emerging market. You can find segments where there's a lot of asymmetry of information, where markets are not efficient on pricing information, and you can really take advantage of that. That's a force for the good. Second, if you can influence governance in general, you can create a lot of shareholder value. So I think these two characteristics, working with asset classes where you had a lot of inefficiency in pricing and asymmetry of information, and being able to exercise influence on management, can really lead to successful returns, overall positive impact on the businesses. Coming out from my impressions, Scott, after those years working at Banco Santos and Fama, besides this learning from Fama and from the partners there and the whole management, I came out with a very intense crash course on dysfunctional financial markets, which was very different from what I had learned in the classroom at SLU, St. Louis University, where the Bible was probably Burton Malkiel's Random Walk Around Wall Street, where markets are efficient and they price information very effectively. And the famous example of a chimpanzee throwing darts at the Wall Street Journal will be just as successful as any hedge fund manager, especially when you discount the hedge fund manager's fees. This in Brazil was not the case. If you were active and you had a solid investment process, good fundamentals, and you had a practice that you were able to influence companies, you clearly could have a lot of positive returns. And in Banco Santos, the thing that I learned, besides seeing companies that seem solid can go under very quickly, mid-sized companies that already had 10 years, 8 years, 15 years of proven revenues, companies that are already profitable for 5, 6, 7 years, companies that had pretty good receivables, these guys would still be raising money completely over-collateralized, very limited amount of the amount of capital you could raise, and very expensive. We're talking about 1.2, 1.5, sometimes 1.8% a month. These guys would be raising 16, 17, all the way to 27, 29% a year with over-collateral, and where 250-day loans were considered almost long-term. So it was very hard to do anything above 360 days. And when I started to think about, if you start a business and you need to finance your pre-operational period and then your go-to-market period and start to scale, this kind of financing is absolutely impossible. So looking at what I had learned academically in the US, studying the rise of Silicon Valley, rise of venture capital, the rise of the J-curve financing, entrepreneurial financing, and seeing how difficult it was to raise capital, even if you were a break-even company with receivables, it was very hostile. So I saw this as an opportunity, especially after the Fama experience. I see, wow, Brazil will eventually, and other emerging markets will eventually need to raise entrepreneurial financing industries to get these businesses off the ground and create these new disruptive companies that demand J-curve, that demand multiple years of pre-operation of product development and then go to markets. That's when I started to have these insights.
You didn't stick around very long there, and you left the world of traditional finance and you went to ABA and Imperium Brazil. So tell me what that was. Seems like a big pivot. Most people don't walk away from hedge funds to go into agriculture.
After those first 4 or 5 years after my undergraduate, I started to have a very early midlife crisis, in the sense that I felt that what I had signed up for in finance, what I had studied, wasn't what I wanted to do. It was very complex stuff, demanded very long hours, all that was cool, but there was no real economy engagement. I didn't see the purpose, and I just didn't feel that I was extraordinarily talented, interested, curious enough to be able to dedicate 34 years, 40 years, 50 years of my life to that activity. So I started to do a lot of soul searching, and one of my friends at Banco Santos, his brother, he had just decided to found a company at Aba Brazil, startup, to be able to do commodity trading, especially of sub-commodities. So by sub-commodities, these are products that have two small niche markets to interest the big ABCDs. So by ABCDs, I mean ADM, Bunge, Cargill, Dreyfus, and some of the other big trader guys. Now there are many different names, Glencore and all these other guys, but they're big enough. And here Let's talk about some of the subproducts from slaughterhouses like a meat and bone meal, blood meal, fish meal, feather meal, all these things that serve for animal feed that compete in many cases with soybean meal, with corn, etc. But they trade at a discount. And usually the very big markets, the very big traders won't be able to or won't be interested in exploiting these segments. But these are relatively growing and large markets. And especially in those years, in 2006, 2007, what was happening was China had become a player. They had been growing very fast rates for many years. And they really started to move commodity markets in those years. That's actually one of the things that drove the Lula 1 and Lula 2 administration so well. Brazilian politicians and the Labor Party will never admit this, but it wasn't the policies that were implemented that were really leading to the accelerated growth. It was China's incredible growth and the super cycle that we had of commodities, not only agricultural commodities, but also mining the metals, right? The value really exploded during those years. And of course, all the Brazilian agribusiness ecosystem followed through in that incredible price range. But when those prices ranged, these sub-commodities also followed because they were loosely correlated with these. This guy called Chico, he wanted to build the international part of the business because he had founded it and started first with the Brazilian domestic business. The business was going very well domestically, but he didn't have the network, the language, the experience to really be able to build a business on an international perspective. And he invited me to be able to become a junior partner there. And then I grew and I became almost a co-founder of the international department, became much more relevant. And I learned a lot during those years, and it was incredible. We found a few verticals that we really excelled. So for example, we built a relationship with a UK-based trading company, one that also worked at the marginal levels of these ABCDs, and they worked the global tallow market. So tallow, beef tallow, right? It's an animal oil, also a sub-product. They had many clients in Africa that wanted to buy tallow for the soap industry and other categories. So we started to work with building a logistics operation and a procurement operation, buying tallow from multiple slaughterhouses in the south of Brazil, throughout the states. We organized all the trucks, the purchases, the logistics operation. We delivered that. We found a logistics infrastructure in the port of Rio Grande do Sul from a company that belonged to Petrobras called Transpetro. And for you to export tallow, you need to have not only big tanks at the port, but you need to have serpentine tubes that you heat up with steam so that the tallow melts when the ship comes and you feed in the ship. That's not something that you have in every single port. We managed to structure it, and we managed to do several vessels of tallow, bulk vessels to Nigeria. And that was an incredible experience. Remember, I had 4 or 5 years of financial services experience. I had never worked in ag. I had never worked in real economy. And all of a sudden we were making good money, but also a lot of responsibility, a lot of risk, and doing something that seemed completely impossible, which was getting a bulk vessel of tallow from a very fragmented supplier industry with a very complex truck driving logistics operation, and then being able to get all of that into the vessel. That was one example. Another example of something that we did is Brazil has a significant sea fishing industry, right? And the leftover of the fishing slaughterhouses is used to make fish meal. Fish meal is a powder made of the leftover of the fish that has very high amino acid profiles. So it can be used as a complement for premix, especially for egg-laying hens and slaughter birds, right? We started to see where we could fit Brazilian quality fish meal, a little bit worse quality than the high quality Peruvian and Ecuadorian. And we were able to find interesting markets in West Africa, in Togo, and in Ghana, and in Cameroon. We started to send a couple of containers over there, and the product became a huge success. We also sent a feather meal or blood meal to Vietnam and Southeast Asia. I learned a lot about Brazilian agriculture. I learned about logistics. I learned about international trading. I learned about markets. And I had my first entrepreneurial experience there, not as a founder, but as a partner, and really living the startup life where if you were not invoicing, you didn't have money to pay employees. You didn't have money to pay any of the fixed expenses. It was incredible. And then we had a very intense, harsh learning process. Our biggest business line of monetization was these fish meal exports to West Africa. We were doing 40 containers a month. But since the logistics was long, this means that any given time, we could have 60, 50 containers out at sea. And there was a bird flu outbreak in West Africa. And what happens when you have a bird flu outbreak, it tends to be the norm. The WHO will reach out and they will say to a given country where the outbreak has demonstrated, say, okay, listen, you need to incinerate all your birds, your chicken, your poultry, etc. In most cases, they'll pay for that incineration. And this happened. And these were my consumers, right? What happened was there was no indemnization for the feed provider. There was only for the owners of the bird. So we had 40, 50 containers out at sea. We were working on a net positive working capital where we got paid a small portion of the upfront that allowed us to give the upfront payment to our suppliers. And our suppliers are giving us already long working capital cycles. And then we had this tragedy. And basically we had all of our orders canceled and we had a lot of containers out at sea and you couldn't bring those containers back. So basically we had an emergency couple of months where we managed to sell this part of the business, this operation, to one of our biggest clients in the south of Brazil. And he became a pretty significant large exporter to West Africa directly. Came out of it with zero debt, a lot of experience, but also very little cash on hand. But it was a great experience.
That brings us up to 2007, but that's when you co-founded SP Ventures. Talk about the sequence of events that led to the founding of SP Ventures in 2007, because the Brazilian venture capital industry was essentially non-existent at that point in time. What did you and your co-founders see that convinced you that building a VC platform in Sao Paulo made sense?
Here I was, 27. I was in the process of selling our trading business. I was starting to think what I wanted to do next, go back to financial services industry, but didn't really love what I did. It was great being an entrepreneur, but I was very nervous, very tense. So what should I do now? Somewhere I read that the Brazilian National Economic and Development Bank, the BNDES, had decided to start a program to kickstart the Brazilian venture capital industry. They had identified that having a deep technology-focused entrepreneurial finance ecosystem that finances the transfer of intellectual property being developed in academia to society through startups as the preferred vehicle, where professors, students, and managers will together build companies following exactly what the Americans had professionalized and started since the 50s and 60s out in Northern California. This was critical for the dynamism and the future of Brazilian economy. And they were going to start a program and they were going to set aside 100 million reais, which by then 100 million reais was probably around $35 million. This was going to serve as an umbrella fund to invest in 6 regional fund managers. They were all going to be pretty much first-time fund managers because there was no venture capital industry, and they would have to invest on a geographic basis. Right? And one thing that caught my attention was you would only be able to invest on a 200-kilometer radius of where your headquarter base was. So I saw this and I said, wow, this is really interesting because it allows me to become an entrepreneur in venture capital and financial services. I will have a single LP. They'll be able to bring the brief years of experience in traditional financial services and also be able to bring my entrepreneurial experience to be able to support and engage and analyze businesses. I applied to become the São Paulo operation to this program. It was a very drawn out period, maybe 6-9 month process of many conversations in Rio de Janeiro, across the board. I was selected to become the São Paulo branch manager, and I started SP Ventures because SP Ventures was officially selected by the BNDES to become the manager of this São Paulo branch of this umbrella fund. But in the end, I think I was very lucky how these things go in life because multiple things conspired in my favor. So first of all, this was in 2007. We had, of course, as everybody knows, the great financial crisis that erupted in 2008, 2009. But in 2007, my friends, my peers, especially the older people that were in financial services in Brazil, in the leading investment banks or hedge funds, they were making a lot of money, a lot of money. So none of them really were concerned. BNDES wanted to recruit someone that was in between their 35 and 45. So they wanted someone that had already at least a little bit over a decade of professional experience, but they also didn't want someone that was already too senior. They wanted someone that still had early entrepreneurial transition drive. And within program, I think one potential mistake that they did when they were budgeting the fund was that they homogenized the compensation packages for every single fund manager within this program on the same pay package. But the cost of the human capital in Sao Paulo is much more expensive than in the rest of the country. So they clearly were not able to recruit someone that was 37, 40 and had a successful career in financial service. I was 27. I was much younger. So what happened was they recruited very senior people to be their fund managers outside of Sao Paulo, in the north, in the northeast, and the south, to compose this fund. This fund was called Criatech. And in Sao Paulo, I ended up being the youngest fund manager. I think the second youngest in the program was 35. I was 27. And I ended up having the opportunity to become an entrepreneur within this acceleration seed funding program for first-time fund managers in the Brazilian venture capital industry, and what has become one of the very first real vintages of especially tech-oriented VC in Brazil. And this has become a huge success in Brazilian public funding, and it has become a very important pillar of the Brazilian venture capital industry, especially going into sectors and areas where the rest of the investors, whether from a geographic perspective or from a deep tech perspective, now it's become more of a liquid ecosystem. I became the Sao Paulo fund manager, and that's why SP Ventures, the fund manager, became called Sao Paulo Ventures, which is SP is short, and that's how we got started.
The Fundo Criatech, was that a fund? And then that became SP Ventures, or what?
Fundo Criatech was the BNDES fund. It's the umbrella fund. This fund was managed by 6 regional fund managers, answering directly to BNDES and to some of their private consultants that supported them throughout the project on the national level. And then there were 6 fund managers. Of these 6 fund managers that were regionally distributed, it's a very interesting success story. 3 of them, the one from the south, from Minas Gerais, and from the north, merged and became well-known venture capital fund manager in Brazil called Triaxis, which has partnered up with one of the biggest fund managers in Brazil called Crescera. And together they manage quite a lot of money in generalist venture investor. That was a very large success story. And SP Ventures, of course, has gone on to raise 3 funds in AgTech, 1 fund in venture debt, multiple times more than the BS funding, and to really build out the not only Brazilian AgTech ecosystem, but also the Latin American AgTech ecosystem and attract multiple times the capital that BNDES puts. So the BNDES project ended up being a very strong success, the first one.
They provided all of the seed capital for your first fund?
Yes.
Was SP Ventures just you, or did you actually have another co-founder, or no?
Just me. And that's when I started to think about the partnership. So first, not into the BNDES program, just me. And then I started to think, how am I going to build this out? What kind of partnership do I want to build? How am I going to build what I have always told my team, that venture capital, it's the most boutique type of financial intermediation there is. Everything is extraordinarily boutique. How you source, how you analyze, how you structure, how you act and add value after you invest, and how you exit. None of it is off the shelf. None of it was scalable. But that said, it's still financial intermediation, Scott.
Right.
And with intermediation, there's a very important characteristic that a lot of people that are in the industry don't realize, which is money is commodity, right? The dollar from Brazil and the dollar from Mexico, in the end, if it's a dollar, it's exactly the same. The magic that the Americans built, at Sequoia, Kleiner, all these guys are great examples. The magic is, how do you decommoditize your dollar? How do you make my money worth more than a competitor, than a family office, than another investor? And I started to study a lot the U.S. industry in these early days at BNDES, at Criatech, to think, how can I decommoditize my capital? How can I decommoditize my money? I build a lasting competitive advantage. Because when I started to look at the US, it became very clear. If you're a startup and you're invested by a Sequoia, your chances of success are much higher than if you get invested by a Midwestern family office that doesn't have direct expression, just gives you the money and says, go ahead, right? And when I started to go deep on that, what I started to understand is, okay, why is a company backed by Sequoia more likely to succeed? First, if you're backed by Sequoia, the chances of you being able to attract top talent go up exponentially. Your stock option for talent, for executives to leave other high-flying opportunities and come join your company, is significant.
Because of their reputation.
Most people in Silicon Valley that are players know someone that has become very rich because they got stock options from a Sequoia-backed company or from a Kleiner Perkins-backed company, right? You understand that is a strong seal of validation. So first of all, you can attract more talent than your peers, and that's a major competitive edge. Second, you can raise more capital. A company that has been backed by Sequoia, their ability to engage and generate interest from follow-on investors also becomes much higher. It's much easier for you to convince your investment committee of a Series B or a Series C to invest in a company that was backed by Sequoia in Series A than it is for a company that had raised non-expression capital in their Series A. Not only do you get the network, the Rolodex of the Sequoia partners to be able to engage with most of the investors in the world for a Series B, Series C, Series D, Series E, but you also come with a stamp of approval. So your ability to raise financial capital also increases. And execution, in the end, you need talent and you need fuel. You need money. Those two things are critical. Third, a company backed by Sequoia also has a much, I won't say easier, but less hard time to access enterprise customers, especially. So if you're at a large tech company or a large CPG company, if you're going to try a new technology, new product, that has no customer validation, it's not easy. But if it's a Sequoia-backed company, it's easy to justify and say, okay, no, this is super promising technology. They have Sequoia capital. Let's become a first or second customer because it will give us a competitive edge. We'll be early users of a very promising technology, etc. So here, what I just told you is a clear example of how an investment from a leading California or Silicon Valley VC decommoditized capital in the sense that the same dollar also brought additional dollars, also brought talent, and also brought access to market and customers. So I started to look at this example. I started to think in the early days of the company, how can I do that in Brazil? And at the same time, thinking about the kind of partnership I wanted to build from a human talent and how to attract people to the company.
So to answer my question, Createch was looking to seed certain of these funds, and you applied. And did they fund 100% of your first fund?
We were single LPs, and not only were they the only funders, to be exact, it was 80% BNDES and 20% a Bank of the Northeast of Brazil, which is also a state-owned bank. But it was basically BNDES commanded the show, but they didn't even allow for you to bring any additional
Anybody else in.
So it had to be exclusive, single LP. It was a price to pay because, of course, the single LP model, the fund size, $30 million spread out between 6 other fund managers, etc. So the economics were very tough, but it was a price to pay to be able to start a partnership, build a track record, and to be able to build the company in the long run. It was a very tough decision because in 2007, I had offers to go back to financial markets and make, for me at the time, a lot of money. And I had this entrepreneurial path that was something that it was going to be at least 5 or 6 years of dedication before I could raise an additional fund. It took into consideration that venture capital, which is a non-existent industry in Brazil, was going to become a driving force and something relevant. It took into consideration the innovation that BNDES was implementing in terms of public policy and working with a public sector bank full of very high qualified technocrats, nonetheless still public employees, because the investment committee was basically BNDES. There was a veto vote for BNDES. So basically it was a single LP with all deciding. So it was a very risky bet. And for me, I think, especially in those days, but still today, making the contrarian bet versus what people are saying is the obvious has been a recurring decision that I've made, and it's paid off. But in those days, it was a very tough decision to sacrifice capital to go a very difficult path.
Your first fund was 10 million US, I think, roughly, right?
Roughly, depending on the exchange rate.
And you told this very nice story about the model being Sequoia, but the fact was you were not Sequoia and Createch was not Sequoia. You're starting from total zero. And I think originally your fund was actually sector agnostic, early stage focused, but it wasn't per se agritech, which is what you are focused now. So tell me about that first fund. You deployed across 8 companies. You thought you were going to be in e-commerce and media. So tell me about that.
The mandate of the fund was deep tech, focused on companies and technologies that were being built out in Brazilian leading universities, and generalists. We had multiple categories that we were supposed to be investing in: new materials, medical technology, oil and gas. And agriculture was one of the sectors where the spelt out concentration was somewhere between 10 to 20% maximum per sector. BNDES really wanted something diversified across the industry spectrum. So I started visiting leading Brazilian universities. São Paulo is very gifted in this respect. We have probably the number one aeronautical engineering center in Latin America, the University of São Paulo, which is consistently ranked one of the top universities in the world and in Latin America specifically, University of Campinas, multiple others. So we have a lot of research facilities. I think 40% of all the innovation investment in Brazil goes in São Paulo state. We have a major provider of research grants in São Paulo called FAPESP, the State Science Foundation, which went on to become one of our LPs in future funds, which copycatted an American grant funding program called SPEAR, Small Business Innovation Research, where they give grants to university professors and graduate students that want to turn their research into a startup, a company, and have to present a business plan, etc. So I started to visit universities, university incubators. This was something that has started recently as well. So now we had these incubators where people were starting companies. I was reading the grant approval documents because since it was public capital, all of this was published on the internet, which researchers had applied for which grants and what they had claimed that they wanted to do, etc. So I started to visit these universities. I started to knock on the doors of these startups and these incubators. I started to send cold emails and started to look for the opportunities, right? And I started to read a lot about how the U.S. venture capital ecosystem had matured. And I saw that in the U.S., the venture funds were usually correlated, their success stories, etc., with vintages and major technological transformation. So like in 80 to 82, you had let's say the PC vintage, right? Which is when the US really hit the 1 million PCs per households that continued to grow. And you had a lot of companies in those early 80s that came out of that ecosystem. And you had the software companies like Microsoft, etc., also in the PC industry coming out. Then you had 94, 98, the internet vintages. So I saw that there was a connection with technological vintages where the US was being a major protagonist in those major technological transformations. So I started to think, what kind of technological transformation is happening right now? And where is Brazil a leader and a protagonist? I started to see where we were doing more research, where was there more applications. I started to look for things that were connecting with academia from the private sector. So I wanted to find sectors that were not only doing research for research, but that were doing research and that were actually engaging with the private sector and getting that IP and that research out and transforming that into value, whether from royalties and IP transfers, etc. I started to look for sectors in Brazil that were dynamic, entrepreneurial, competitive. And of course, not only doing my own research. And by this time, I started to hire interns. I had a little bit of budget to be able to build out the team. So I hired an intern. Then I eventually hired an analyst. But I was also getting educated by the entrepreneurs. This is something that I've always told everybody that joined the team, especially the young people. There is a huge luxury in being a venture capitalist, which is every time you receive an entrepreneur, you're receiving an industry specialist that is going to give you class on a market, on a technology, and he's going to do it hopefully with passion because he's dedicating his life. So you have an hour to be taught, to learn. So you need to get into every single origination screening startup meeting with the intellectual curiosity to really dive into what moves that person. Why has that person dedicated his life or made the decision to leap into that opportunity, and ask all those questions from that intellectual curiosity about the market, about why there's a transformation, why there's disruption, about what are the bottlenecks, what are the competitive forces, etc. So I was getting educated by entrepreneurs all the time. I would have breakfast with medical device entrepreneur. Then I would have a late morning coffee with someone from urban mobility. Then I would have lunch with someone from oil and gas. Then someone from AgTech. Then some new media. So I was getting educated. And then very quickly, I started to stumble on something that I think has become more mainstream as of recent. But at the time, this was completely not understood, not comprehended, not spoken about, which is Brazil was in the middle, in already an advanced stage, but still in the middle of a major agricultural, technological revolution. If you looked at these numbers were already available back then, whether you're looking at FAO, the Food and Agriculture Organization of the UN, whether you were looking at World Bank data, whether you were looking at something from a private consulting company like BCG or McKinsey, there was a convergence that when you looked at the long-term prospects of agriculture, it was almost epic. because from 2010, I think we were in the 6.5, 6.7 billion people range in terms of global population. And there was a consensus that by 2050, you were going to be between 9.7 to 10.7 billion people. There was a consensus that what was happening to China, where they had this extraordinary growth by starting to bring elements of capitalism into their economy, market-based elements, that they were being able to take hundreds and hundreds of millions of people outside from the line of poverty to become an emerging middle class. And this happens. These hundreds and hundreds of millions of people consume a lot more calories per capita, and they consume a lot more animal protein per capita. And animal protein puts a lot more pressure on grain and vegetable production because you have to feed the animals and then build and land and water. There was a consensus that you're going to have to produce 40 to 60% more food in 30, 40 years. And when you cut the size of the population already in 2010, where it was going, that 40 to 60% extra was more food than we had produced in the last 4,000 years. So we were going to have an epic leap. That was one point that was fundamental. Another thing that I came across at the time, I think nobody knew. Now it's become more or less understood in Brazilian mainstream society. It's agriculture that is practiced in Brazil is very different than agriculture that is practiced in the US, in Canada, in Europe, in Eastern Europe, in Ukraine, Russia, etc. Brazil is a tropical agriculture ecosystem. And when we started to understand the particularities of this, you start to understand some opportunities. In Brazil, we don't have winter. We don't have between 4 to 6 months of the year where biological activity is frozen or crawls to a halt. In Brazil, you don't have the diapausa, as it's called. In Brazil, the plant, the pest, the disease, the weed grows all year long. Soil erosion happens all year long. This means, and on one side, you have an opportunity. You can plant and seed multiple croppings a year, but the operational is much more complex. Everything. You need to have completely different mechanisms, systems, technologies, products, etc., to be able to make this work. So tropical agriculture is radically different. And Brazil had built out internally this system and scaled it. And at the time, another thing that most people still don't know in Brazil, because you hear a lot of people saying that agriculture in Brazil is a form of neocolonialism. We produce low value-added commodities and we import industrial goods. If you look at Brazil, the three major sectors of the economy, industry, service, and agriculture, industry has flatlined. And at the time, they had already flatlined for many decades productivity growth. Service grows around 1% productivity growth. Agriculture was already and has continued to grow at approximately 3% annual productivity growth. So productivity growth is the best indicator for you to see if you're implementing innovation, science, technology within a category. Sure, you can import technology for a few years and be able to have a few years, but you can't do 50 years of consistent productivity growth at those numbers as Brazil is doing if you're not really building homegrown innovations. And of course, this goes from deep science that are going on in universities all the way to farmers being entrepreneurs at the end, experimenting with new systems, new processes, really having a very fluid dynamic. So we saw this already. It was by far the most dynamic, competitive, innovative sector of the economy.
You quickly identified that Brazil has a tropical agricultural climate, and you're saying that there's substantial advantages to that compared to most of the world, which has what you call temperate agricultural climate. What are the differences specifically, and where does that lead you in terms of your investing?
With one caveat on the tropical climate ecosystem, it's much harsher for agriculture the way it is. So for you to transform it into a high productivity, high profitability agriculture system, you need to build out a lot of innovation, a lot of sciences, and you have to build it out from almost scratch. You need to really develop a lot of new innovations and technologies.
But why is it harsher?
The fact that you have activity all year long, it means that the pests, they grow and they have super infestations much more intensely. And given an exact example of GMO and chemical results. When you implement a new pesticide in temperate agriculture, you control the pest very well, and usually you do it once, twice a year. And eventually that pest is going to develop through natural selection resistance, but it'll take a long time, right? And you can use many models and technologies or processes. You can rotate crops. You can cycle in different chemical solutions to increase the shelf life, and it doesn't really become an issue. In tropical agriculture, and Brazil specifically has been nicknamed by many of the large chemical companies as the graveyard of chemical technologies for agriculture. Because since the pest population, the pest pressure is so high because there's no period that actually kills capability of the pest reproduction, you need to be putting chemicals all the time. So when you're putting chemicals all the time, what happens is you start to select the resistant species very quickly. So in 3, 4, 5 years, you've been increasing the dose and the pests are still coming out. You need to bring in different models and different innovations. So going directly to an investment thesis of ours and how it fits and why this has become the global innovation epicenter for this category in Brazil. You need to have a broader arsenal against pest management because the chemicals, they lose efficacy very quickly. And of course, this is correlated with another major trend, which is it's becoming much harder, much more expensive, and it's taking much longer for you to identify a new chemical molecule and get it approved through regulatory channels. So you're losing arsenal in chemistry, and here it loses efficacy. Shelf of the product life cycle is very quick. So what did Brazilians basically engineer and scale? And today we have the largest and most robust industry. We understood that when you're talking about tropical agriculture, you need to build out some kind of equilibrium that nature had before as a mechanism to control pest populations. So remember something, Scott. Before you took down the forest and implemented a monocrop system, there was an equilibrium in nature between pests and its natural predator in nature, right? When you take out the forest, you introduce a monocrop, which is the food for the pest. You kill the natural predator, and you created a huge surplus of the food for that pest. It's kind of obvious that you're going to have a major infestation. What did Brazilians start to do? First in sugarcane in the 80s, 70s, and 80s, and this has become a major industry. We were pioneers in the biologics sector. So we started to find natural predators, for example, wasps, fungi, viruses, etc., that attack those pests. It can be a caterpillar, it can be a grasshopper, it can be a stink bug, etc. We developed a technology to industrially produce that natural predator. Then we developed the technology to mass inundate the harvest, this soybean, corn, cotton, etc., and bring down the pest population with a natural predator. I'll give you a comparison. It's as if you created a major surplus of gnus in Africa. You mass produce lions. You liberate those lions. They hunt the gnu population. The gnu population goes down. Once the gnu population goes down, the lion population controls itself. But since you have created in a permanent environment of lack of equilibrium, you've created an environment where there will always be an imbalance as the gnus come out. So you need to come out and you have to release additional lions every single year. This is the same thing, logic of the biologics industry in Brazil. Brazil had already built out the largest biologics program in the world in sugarcane in the 70s and 80s. When we started looking for investments in the space, we found a startup in the University of São Paulo in Piracicaba. This is an agronomical school called ESALC, Escola Superior de Agricultura Luiz Queiroz. This one is consistently ranked as one of the top 5 agronomical science universities in the world. It's always number 1 ranked tropical agriculture. And these guys had identified this company called Bug, and they had raised multiple series of grant funding from this program that I mentioned earlier to be able to find this parasite wasp that parasites the sugarcane borer, which is a caterpillar that attacks sugarcane. The scientific name is Diatrea saccharalis. It's a major problem for sugarcane. And they found this parasite wasp that parasites the eggs of this caterpillar. So it works on preventing their reproduction. And it's a very efficient parasite. The eggs don't eclode. And out of those eggs come out more parasite wasps and with that, you can control the population, of course, gradually, but it super works. And these guys have developed technology to not only large scale production, but also large scale application. We invested in this company in 2009. This is a company that was sold to a leading Dutch biologics company in 2015 called Koppert. They were already probably the largest biologics company in the world. Today, they're one of the largest biologics players in Brazil. And this acquisition was one of the major levers for these guys to become relevant players in Brazil. And this is a company that probably was the most successful case in building out large-scale caterpillar control with a biologics product using macrobiologics, so large macroorganisms, anywhere in the world in this kind of environment. They eventually pioneered also JVs and partnerships to use drones. This was in 2014, 2015, when this was still very early. So also very pioneering. And they had set up an R&D a joint venture with a company out of the aeronautical engineers. So started to have networks between the universities of economical sciences with aerospace, something that Brazilian agribusiness has been very effective in building these R&D networks to solve multiple different problems using different expertises. This was our first encounter with biologics. And this has become a major area of investment of ours. Today, the Brazilian biologics market is well over $1.2 billion, by far the largest biologics domestic market in the world and one of the most innovative. Because remember, I spoke about the tropical nature, which puts pests in a population. But there's another element that is also very important. It's about how much biodiversity do you have, Scott, to be able to find these natural predators and these organisms and these solutions. And at the same time that the pest pressure is much higher in Brazil, the biodiversity is much higher. I believe 70 to 80% of global biodiversity is in tropical climate, tropical ecosystems. So you have a much bigger database to be able to find products and technologies to be able to combat. And this is not random. The reason there is such a higher pest pressure is because there is such a higher biodiversity element. So this has become one of the most important pillars of global regenerative agriculture, is being able to find natural predators that, even if just for a short window of time, reestablish an equilibrium, a nature-based equilibrium. So this is a nature-based solution using local biotechnology.
Chico, as you identified, maybe almost by accident, that this is a unique competitive advantage because, first of all, this tropical agricultural environment is something that's unique to Brazil. At the same token, the solutions to accommodate that must be developed locally, because temperate environments and climates, they don't have the ability to develop those solutions. Is that really the thesis of what you're doing?
100%. And let me build on that, because probably the biggest challenge of emerging market venture capital today is exits, it's liquidity. So picking up on what you said, when you look at all the big input technology companies in agriculture, whether we're talking about seed, whether we're talking about chemical, across the board. So the BASFs, the Syngentas, the Cortevas, the Bayers, the Mitsubishis, the Sumitomos, across the board. These guys have an R&D program and structure where they do R&D in Japan, they do R&D in Basel, they do R&D in North Carolina, they do R&D in Germany, and then they bring that innovation to the market that they want to serve, right? And all of a sudden, when we look at that in tropical agriculture in this new growing class, we say, well, this model doesn't work. They can't find microorganisms, viruses, fungi, etc. in Varia and bring it over here. So they're going to have to do local R&D. They're going to have to do local bioprospection. They're going to have to do formulation. They're going to have regulatory challenges, because it's tough for you to take a virus from Brazil to Basel, handle it over there, produce it over there, then bring it back. It's challenging. At the same time, Brazil is a top 2 profit center for pretty much every relevant agribusiness company in the world. This is a market that really matters. And if you're looking at the future, and the future is not chemical, the future is biologics. And biologics means doing local R&D. This means that you're going to have to buy local assets. I mean, these guys are going to have to buy local teams that do these R&Ds. They're going to have to buy local pipelines of products, local regulatory assets, local distribution assets, all these things, which is exactly where we said, okay, we're going to invest in this. We're going to build out these capabilities, and then we're going to have liquidity channels selling to these guys. And this has become a basic pillar of our investment strategy. So, of course, we just spent a lot of time just talking about crop protection, which in Brazil, if you look at chemical crop protection, Scott, it's between $12 to $15 billion market, broken up between insecticide, fungicide, and herbicide. But something magical has happened in the last 5 years. I think the world, Brazil, and the world has understood that biologics, it's not just about crop protection. It's also about plant nutrition. So Brazil is around the $20-25 billion fertilizer market. We're the biggest fertilizer importers in the world. And this is nitrogen, phosphorus, potash, etc. Most of it comes from the Black Sea corridor. So we had a major shock with the Ukraine-Russia crisis where there was a significant imminent risk of supply. And we started to think about, we need to have a national program for fertilizers to be able to gain independence because there is no major agriculture without fertilizers. And then they started to realize something that was known for many years and now has become a very fast-growing biologics product, which is there are many microorganisms that enable, through biological process, nitrogen fixation from the atmosphere into the plant. The plant can do it. So instead of having to sell urea and other products, you can use microorganisms to be able to substitute a very significant. Some of our companies, portfolio companies, are doing R&D partnerships with the biggest agribusiness companies in the world to substitute in a 3-year time horizon 40% of their nitrogen fertilizer application for biologics. And the same thing goes for phosphorus solubilization. So the market is becoming much bigger than just that $1.2 billion is eating in the $10 to $12, $15 billion crop protection market. But now they're looking at the $20, $25 billion market for chemical fertilizers. And that starts to become the playing ground for the fertilizers, for the biologics industry to be able to attack, eat out a very relevant market share and build out. And what has happened in the exit opportunities? When we invested in Bud back in 2009, and Bud went through a great journey, they became a tech pioneer at the World Economic Forum, same vintage as the Airbnb guys were in the same selection cohort, and was acquired by a niche crop protection biologics company from Europe. Since then, biologics has gone mainstream. Now the Syngetas of the world, the Cortevas of the world are investing in buying biologics assets. And now it's becoming a mainstream fertilizer play. We're seeing the Yaras, the Mosaics, the Nutrients of the world also start to get into biologics. OCP from Morocco. So you start to look at the opportunity as a venture capitalist. Now I have assets that I don't have just 8, 9, 10, 12 chemical crop protection companies. Now I have 30, 40 players, including fertilizers. And this is not just the large players that we know today, because there is a major transformation going on in the chemical industry as well. We look at the top 7 or 8 formerly generics Chinese companies. The number one is Rainbow. These guys are no longer generics chemical providers. These guys are doing a lot of frontier science in chemistry, and they understand that biologics is also the future. So they're starting to look into buying assets and understanding how to scale in this segment in Brazil and in the relevant markets. So all of a sudden, this has become an incredibly hot M&A market.
Let's talk about what SP Ventures looks like today since that first fund in 2007. How many funds have you raised? What's your total AUM? Just give me the overview.
In 2013, we said, okay, now we have 6 years of BNDES investment track record. We've identified this unique opportunity of becoming a sector-specific venture fund, focusing on the area that Brazil is by far the most globally competitive, the most science-driven, and the most entrepreneurial-minded, which is agriculture. We're going to become the best AgTech venture fund in Brazil, and hopefully one day in emerging markets and maybe even the world. So that was the mission. It was not accepted by the BNDES agreement, which had exclusivity. We had to stay multiple years more. This was year 5 or 6, so we were already on the exit period. So we had to make a very tough decision of saying, okay, we'll leave BNDES, we'll spin out formally from the program. We spun out in 2013, raised our first proprietary fund in 2014. We convinced LPs to be mostly venture fund. So we did 70% of the fund allocation towards ag. We still had to do 30% into generalist tests. This was 105 million reais, which at the time was probably around $35 million. So it was already significant more dry powder than we had. We built an investment thesis, Scott, that has become our pillar, which is we segregate by the 2 major value chains. We look at grain, vegetable protein, so agriculture, and we look at animal protein, so livestock. We segregate by upstream and downstream. So we look at the entire value chains, and we segregate by what technology, what innovation brings scalable competitive edge, digital, life science. And of course, with AI, these things have totally merged. We invested in 21 companies in our Fund 1. Then in 2019, we felt that we were ready to up the game. We decided to structure a regional fund, so no longer just Brazil. Let's take the learnings that we have in Brazil, the most sophisticated, the most dynamic agribusiness ecosystem, to the rest of the region. So let's invest primarily in our Fund 2, which was the first regional fund in Argentina and Mexico, which are the most developed ecosystems around. And let's raise money with the absolute best investors in the world in agriculture. So our Fund 1, when we left BNDES, we raised a lot of developmental regional capital. So we had the State Science Foundation of São Paulo that I had mentioned previously. We had the State Development Bank of São Paulo. We had a Finance and Innovation Government Agency. We had a regional development bank called CAF, and we had 20% private capital. So Fund 1 was the first one that we brought private capital in on board, extremely important. And we said, we have to have an aim that as we progress will increase the amount of private capital we have, eventually to become the majority and the predominant source of our funding to be private, and also diversified. By different pockets, we meant geographic, we meant industry across the board. So we took this to heart. In 2019, we started raising our Fund 2. As I mentioned, we set it up in Delaware, so US-based, to invest in Latin American companies. And we brought a very interesting profile of best-in-class investors. We brought Syngenta, we brought BASF, we brought Yara, we brought Mosaic, we brought the two leading Brazilian banks in agriculture, Banco do Brasil and Bradesco. We brought the IFC, so the private sector arm of the World Bank. We brought the Inter-American Development Bank, the most active venture LP in Latin America is the IDB. We started to bring the first families. We brought European families. We brought an American fund of funds. So we really diversified our LP base. We targeted $50 million, Scott, for our Fund 2. We ended up raising 58. We started to focus on building our second layer of leadership. So we started to bring in multiple talented principals, associates, analysts, built out our partner level as well, and then started investing. And we invested Fund 2 from 2020 till 2024. In 2024, we started to raise our Fund 3. We hit our first close at the end of 2024. We're targeting $80 million on our Fund 3. We hit 22 as the minimum first close. We're doing the second close this month where we're going to hit around $55 million. And we already have the LPs lined up to hopefully hit the hard cap. The target of the hard cap is 100 million US. Even in very hard times, this is definitely the hardest time to fundraise in Latin American venture for the last few years. We're still going to be able to double our AUM because of the sector-specific focus that we have built out, where we can show investors that investing in agribusiness in Latin America with an innovation focus is very different from investing in the rest of the region, investing in broader GDP, etc. If you go across our three funds, including this close, we have around $140, $150 million, and hopefully we'll close the first semester of next year at the $200 million mark, which for us is a very important mark because it's 1 billion reais. And that is definitely a number for us that was very ambitious, and very happy to have hit it.
How many people are on your team, and what's your geographic footprint?
So we have 12 people on the team. We have 4 partners. The 4 partners are based in São Paulo, but one of our partners is Mexican. She has been in Brazil for 10 years. She was a leader in leading companies like Syngenta before joining us 5 years ago. Then we have 2 principals. One of our principals is our country manager in Mexico City. So she manages our operation in Mexico. Then we have an associate, 2 analysts, one head of impact ESG and one head of administrative affairs. So most of the team is Brazil-based. Out of the 12, we have 11 people headquartered in Brazil. Many of our strategic LPs have very large operations in Argentina. Incredible human talent. If you look at the most valuable company in Latin America, it's an Argentine company, Mercado Libre. And the Argentines have really specialized in building companies that can conquer the rest of the region. So that is our thesis over there. And then we did 10% of our Fund 2 in Mexico, which we see as a completely different ballgame. In Mexico, we are the gringos, right? I mean, we are the foreigners. It is very dangerous because even though we have a lot of cultural correlations, it's very easy to think that things work similarly, but no, it's a completely different ballgame. So you need to have boots on the ground. That's why we have a country manager, and we plan on building out the team over here. And in Fund 3, where we have brought our first African investor, we have brought several Latin American investors from Central America, from South America. We're also working hard to be able to build our geographic footprint beyond those 3 countries. We see a lot of potential in countries like Colombia, in countries like Chile, of course, great human capital as well. The rest of the Andean countries such as Peru, Ecuador. We see vibrant integrated ecosystems in Central America, from Costa Rica to Guatemala. So we're looking across the region, not only to be able to support our entrepreneurs from those 3 early ecosystems as they attack and conquer and bring innovations and improvements to agriculture productivity in these other countries, but also to be able to find very best talented entrepreneurs from those ecosystems as they come and as they conquer the big 3 markets.
You've argued publicly and pretty forcefully that Latin America agri-food and climate tech is one of the best risk-return opportunities of this generation. You've called agri-food the locomotive of Brazil's economy. That's a bold claim. I do know that Brazil's transformed from a net food importer in the 1970s to now feeding around 800 million people worldwide. Say I'm a global allocator sitting in New York or London who hasn't spent this time in Brazil. Why should I care about Latin American AgTech?
So first, on the 800 million people claim, it's important to emphasize that's 800 people beyond Brazil. So today, we produce calories per capita for over 1 billion people, 200, of course, a million plus in Brazil, and then 800 million that is surplus export. So let's get the last 10 years. And let's use Brazil as a proxy for the region because I think it simplifies the discussion. Over the last 10 years, we've had a little bit of everything in terms of economic extreme events. In 2015, 2016, Brazil had self-inflicted macroeconomic wounds that led to a 7.3% depression across 2 years. Agribusiness grew on both of those years, 2015, 2016. And I will make the case why. 2020, there was a global pandemic. Global GDP shrank. Brazilian GDP shrank by 4%. Brazilian agribusiness grew by double digits. By many analysis, by over 20%. It was an incredible year for Brazilian agribusiness GDP when the rest of the world and Brazil were suffering and having very harsh situations. And then in 2023, we had a democratic transition from the Bolsonaro government to the Lula government, and there's a lot of potential disruption. Agribusiness GDP grew by almost double digits. And agribusiness is around 25% of GDP. And if you factor out Brazilian agribusiness GDP growth in 2023, you'll see that GDP basically flatlined. It didn't grow almost anything. So 3 very different situations that cause significant harm, one domestic, one foreign, and one politically structured, not macroeconomic. In all 3 of these, Brazilian agribusiness performed positively, in most cases incredibly. Why is the sector simply more resilient, more dynamic, and outperformed? Many reasons. One, Brazilian agribusiness is diversified across 3 major categories. First of all, export-driven. We sell to over 170 countries. If you look at our trading partners, very fragmented, very big in Asia. China is our number 1 trading partner, but we sell a lot to Southeast Asia. We sell a lot to the Middle East. We sell pretty much everywhere. So whenever you have problems in different areas of the world, diversification allows us to cancel those problems out. And we have several examples where this happened. I will use the example of the pandemic. When the pandemic started in April, about a month after Brazilians had gone into lockdown, the Brazilian Institute of Economic Research, IPEA, launched a paper stating that agribusiness was going to suffer. And they were going to suffer for a few reasons, but the number 1 driver of that suffering was going to be a reduction in the consumption of beef because unemployment was going to raise because of the pandemic, and that people were going to go into austerity mode, and they were going to cut the most expensive protein, which is beef. Well, IPEA was completely wrong because they didn't take into account the global diversification advantage of Brazilian agribusiness. The Chinese had multiple back-to-back years of African swine flu, and China is already the biggest swine producer in the world. The stats are not 100% transparent, but most research estimates that China had to decimate between 30 to 50%, and most of the experts say much closer to 50% of their swine population. We're talking about 20, 25% of all the swines in the world were decimated because of the African swine flu in China. This means that they had a major protein shortfall. And Brazil hit multiple records of beef exports to China during the early months of the pandemic, June, July, etc. And that more than compensated a shortfall in domestic consumption, and beef prices actually went up. So that's the magic of diversification. So we are a diversified agribusiness economy across the entire world. Second, we're diversified continentally in terms of production. This brings climate diversification. When we have a rough El Niño and you have extreme climatic events, it'll be in the south or it'll be in Mato Grosso. But once you cancel it out from a continental perspective, we see a very resilient ag economy where one area suffers, another area goes very well. And this keeps us going as a very resilient, very trustworthy food security partner globally. And this is definitely shown in our total output production. And third, we are very diversified across crops. So if you have problem in pricing in one crop, you have more than compensation for the broader agribusiness economy. And I'll give you an example. Last year, we were the number one exporter of corn, soybean, beef, poultry, cacao, coffee, cotton, citrus, sugar, and ethanol from sugarcane. We have three diversifications that make Brazilian agribusiness extremely resilient. Second point, because we are export-driven, Scott, the revenue for agribusiness is dollar denominated. This basically makes the region immune to currency foreign exchange crisis, which has been a Latin American nightmare for decades and decades. The revenue is dollar denominated. This has brought long-term stability in terms of revenue and generation of cash flow for the ecosystem. Third, the product that is produced in agriculture, when we look at the feed and the agricultural food produce, taking out cotton, is at the bottom of the hierarchical pyramid of Maslow, which is food. So there's much less elasticity. It's a very inelastic demand. People cut other things before they cut ag. So the core benchmark has been a product that is pretty inelastic in terms of demand, so much more stable in its demand generation and demand growth. Fourth element why the industry and the sector simply disconnects with the rest of the economy in terms of dynamism and outpacing, it's because of its science-driven. It's by far the fastest growing productivity major category of the economy. And we are a living example of this. We visit the leading research facilities. Embrapa, the Brazilian research organization that has over 46 research institutes, specialists in regions and specialized in crops here in Brazil, it was responsible in the 70s for tropicalizing soybean through genetic engineering and a lot of biotechnology and applying rhizobium for nitrogen fixation across the board. So that's very deep-rooted in science. And then the last one that I will use as example is entrepreneurial private sector drive. If you compare, Scott, the three major agricultures, European Union, the US, and Brazil, and you look at subsidies in the European Union under the Common Agricultural Policy, you look at subsidies under the Farm Bill in the US, and you look at subsidies in Brazil under the Plano Safra, Brazil is by far the least subsidized. So I'm a firm believer that government interventions are very important to fix market failures, but wherever public capital stays and remains in the long run, what you do is you asphyxiate private capital and you kill dynamism, you kill entrepreneurial drive. Brazilian agribusiness is an example that it's probably the least subsidized major category in the country when you compare it to industry. It's the least protected. So agriculture competes across all these countries that we export. We compete with other players. And the lack of subsidy compared to the other ones and the global presence has made the sector much more competitive, entrepreneurial. And I think there's a long way to go, but this is definitely 5 reasons why the sector is such a promising investment. And remember, Strat, the front line of climate finance right now is Latin American agriculture, because if you look at Latin American agriculture, tropical agriculture, it's by far the most vulnerable one to extreme climatic events. So that's another major investment opportunity.
Let's talk a little bit about your investment strategy at a high level. You focus on 5 core verticals. Give a brief overview of those verticals and tell me how you arrived at those 5 and how do you balance capital across them.
So one thing that's important, Scott, talking about our investment strategy, it's that each vintage talks to the next vintage, right? This is the major advantage of investing in a fund manager that is on his 3rd or his 4th vintage and has been consistent on his investment strategy. And consistent, I mean sector and geography, because not only is he generating deal flow, but he is seeing how technological adoption, disruption, and infrastructure is changing. And he can really catch those nuances and be able to invest. Another thing about our macro strategy, Scott, it's that we've learned over the years that it's very important to reserve a lot of dry powder for follow-on investments. So today we start out a fund with a target of doing 40% of our dry powder for first investments, 60% of our dry powder for follow-ons, which tends to be more than most funds do. And actually, if you look at our fund two, we've done 36% of our first checks, first investments, and we're probably going to do 64% of the entire fund's dry powder on follow-on. So It's super important in a geography like Latin America, where capital is much scarcer, for you to have capital to defend and protect the companies that are performing well and that continue to need capital. And capital here is still, unfortunately, not a foregone conclusion just because we deliver results. In terms of sectors, the sectors that we've been investing the most and that we see vintage from vintage evolution and that we believe will continue to be core components of our investment strategy. So we mentioned biologics. This is an ongoing transition. I told you that in Brazil, just the biologics market opportunity, when we look at crop protection and we look at fertilizers, it's potentially a $40 billion market. Of course, the substitution is not going to be complete of chemicals, but it will be significant. It could be 20 to 40%. So we're talking about 40%. We're talking about a $16 billion opportunity just in Brazil. And we have recently started to invest in biologics in Argentina. We're seeing very fast adoption of biologics in Paraguay. Mexico's a little bit behind on the biologics adoption, but it's getting there in the rest of the region as well. So just Brazil, we're talking about a $16 billion opportunity just in those two categories. But we're seeing matching of the climate opportunity, one of our fastest growing biological sales in our portfolio company, Jenica, which is the star of our Fund 1, is drought-resistant bacteria. So bacteria that allow plants to maintain steady performance growth, even if they encounter during the plant growth cycle, drought or extreme heat. So this is a new product line that it's not at that $40 billion total potential playing field, and that's increasing that market size. In biologicals, core, we've done first, we've done second, we've done third generation. Now we're looking at fourth and fifth generation as we move from biologicals to microorganism generated molecules, RNAs, peptides, more complex formulations of biologics, multiple organisms in one product, and of course, continuous bioprospection, seeking within our tropical ecosystem the best nature-based solutions that we can bring to high productivity, reestablished regen ag practices. Second major category that we've been investing heavily, Scott, is financial services. From much of our conversation today, you've noticed that even though Brazil is, São Paulo specifically, the capital markets capital of Latin America, it's still a very dysfunctional capital markets. And if you look specifically at agriculture, it's probably one of the most dysfunctional financing sectors in the world and in the region for sure. And this is for many reasons. There are many risks associated with agriculture that traditional lenders are not used to running: climate risk, biological risk, FX risk, commodity price risk. Farmers, it's hard to get all the data from them. It's hard to do credit scoring, etc. So building a new tech-driven financial services industry focus on farmers is one of our core areas of investment. It was the biggest area of investment in our Fund 2. We deployed 35% of our Fund 2 towards this. We've been early investors in what I believe to be the most successful ag fintech company in the world, Agroland. They've gone on to raise, since we pre-seeded and seeded them, over $80-90 million over a 3-year horizon, including 6 months ago when the funding ecosystem was basically dry. And they have really scaled the opportunity. We invested in a company called Thrive. We were the seed investors in these guys. And they built out ag fintech platform, very focused on sustainable finance, regen ag finance, etc. And one of the products that they have scaled in partnership with Rabobank is the RCF, the Responsible Commodity Facility, which I have heard from multiple senior level leaders at Rabobank in events, in the World Climate Foundation event a couple of weeks ago and in the Global Impact Investing Network in Berlin earlier in October, that RCF is the most successful blended finance program that Rabobank has been able to deploy across the world and probably among other financiers. And the Green Climate Fund has just approved the $100 million facility for this starting 2027. So ag fintech is a major category at scale, bringing not only climate finance, but also financial inclusion for small and medium holders.
What do most global investors misunderstand about how farmers in Latin America fail to access finance? And what are the specific pain points that agri-fintech companies are trying to solve?
What most financiers have a challenge in understanding is how different a sector it is when you look at the risks, right? And you associate that with the lack of data, because there's simply not a lot of local data, farm data, productivity, historical data. So it's a combination of a lot of different macro risks associated with the lack of data. Even in Brazil, which is an agribusiness country. I always tell people the business of Brazil is agribusiness. This is definitely the locomotive of the country, as you very well pointed out. Capital markets are just starting to learn about agriculture. So we passed a new law, which was a deregulation of capital markets for agriculture called FIAG. This was 2018, 2019, which has grown capital markets for agriculture in Brazil from 10 billion reais, around $2 billion in 2020, to 40 billion reais last year. This has continued to grow. So it's grown 4x. And what we're seeing is a lot of the financiers, whether equity or debt, in Faria Lima, which is the Brazilian Wall Street, they simply didn't understand agriculture when they started to funding. So they didn't understand that it's a cyclical business. They didn't understand that it's climate dependent. They didn't understand that they needed to be looking at all the commodity price for forecasting, including the USDA reports and other ones, because commodity prices were critical. They didn't understand the logic that it was a ratio between input prices and commodity prices. They didn't understand the logic in Brazil that freight is one of the most important elements in pricing that is not available. So you don't have a market for highway freight that you can look at futures market. You can see how the price is going to be in hedged, and that's a very important element. So there's a lot of elements. They didn't understand the value chain. Who are the farmers? What does a trading company do? What is a crusher? How integrated is a supplier? What is a seed provider? They didn't understand the logic of the ABCD. There was just a lot of lack of understanding. This has started to change very radically in Brazil. And I think that Brazil is going to become, I think it's happening in real time, one of the most sophisticated agriculture financing models. This has merged with what I believe is the most sophisticated fintech ecosystem in the world. Nubank is the best example. It's a bank that was created in 2012, 2013, and today has over 100 million customers, probably the biggest Brazilian bank. It's by far the best experience, the best digital experience. So this is starting to hit agriculture. And just as transformational as Nubank was for consumer finance, now we're seeing this new generation, native digital, innovating in business models, innovating in regulatory models, and being very aggressive in implementing and adopting technologies without any legacy systems or any legacy operations. This is becoming simply very transformational.
In discussing your verticals, you've talked about agrifintech, you talked about biologics. You also have investments in logistics and supply chain infrastructure, climate intelligence, carbon markets. These are maybe less flashy than these other categories, but you've been significantly here. Walk me through that quickly. So I want to make sure we touch on what you're doing.
Logistics, for example. Brazil has a very precarious logistics infrastructure. The U.S. has coast-to-coast highways, railways, especially in the Midwest, the riverways of the systems between the Mississippi and the Missouri, going all the way to NOLA, to New Orleans, Louisiana port. Brazil has none of this. We haven't been able to attract FDI to be able to build our railways and our riverways. So around roughly 80% of Brazilian cargo is moved by highways. 70% of this roughly is in agriculture. So we're talking about 56% of all logistics that take place of goods in Brazil is agribusiness and its highways. In many cases, this goes through the 163 highway in Mato Grosso, which is dirt road in certain areas of it. And Mato Grosso is the biggest grain producer in the world. So a place that is feeding the world with the most sophisticated, technological, innovative agricultural practices inside the farm. It meets this medieval infrastructure to be able to get those goods to the ports, whether in the south and the north. So we invested in a company called GoFlux, which has become the vertical SaaS winner in the logistics optimization for highway freight. And they started helping shippers manage their transport companies, small transport companies, individual truck drivers, medium-sized ones. Then they started offering services for these transportation companies to be able to match with their shippers and to be able to engage and to be as low friction as possible. Then they built a second layer of platform, which is scaling very fast, which is when you have the SaaS and the optimization digital platform, they started to offer financial services to the transportation companies. These guys were in many cases completely marginalized of the banking segment. This is a SaaS-enabled financial services platform now that is optimizing logistics and solving the credit problem. And now they're also providing data to big data providers on what the freight price will be in order to create potentially a futures market for freight prices, which, as you mentioned right now, you can use the futures market to be able to mitigate and hedge your risks for soybean, corn, deliveries, etc. But you cannot close the price of the freight account. like GoFlux is now being able to provide key infrastructure data because of their size and their penetration to be able to do that. So logistics is a huge opportunity to be able to build an infrastructure company like this through SaaS and now AI and through additional business models and innovations. Another category that we're super excited, but it's been a difficult one, is in financial or in disintermediation. We've invested in inputs, fresh produce, cattle marketplaces in the region. The first generation has been very bloody. It's been very hard to get goods and services to be transacted on platforms. I think agriculture remains globally the last major industry to be disintermediated by digital platforms. When you sell goods in agriculture in Latin America and in Brazil specifically, there are three things that make it very sticky on the offline channels. One is the credit is very associated with that moment. When you sell an input or when you sell a machinery, you usually need to match that with a financing instrument or credit. That has been hard to get on a marketplace where you buy something and you finance it at the same time. Second, there's usually a very strong component of a technical assistance. So in many cases, for example, for you to buy a agrochemical or a fertilizer or even a biologic, in many cases, you need to write a prescription. You need to have a technical assistance handling that part, being able to solve that issue. And third, the logistics, where you can have these urban logistic concentration centers around big cities. Farming in Brazil is continentally distributed in the very far reaches of the country. So I think those three factors have been very important sticky points in making it harder and harder for us to get marketplaces to operate. That said, there are two things that I think are changing the game. First, as we mentioned here before, we've built out the digital infrastructure for the rest, right? Now logistics is happening digitally. Now financial services is happening digitally. And now you have these precision agriculture platforms that do recommendations of products and what to use and how to apply. So now you already have digitally a very strong component of those three sticking points happening. And that, I think, starts to reduce that friction. And the second one is AI. We're seeing our marketplace investees already implementing AI very aggressively to be able to substitute or complement the onboarding transactional process that used to be person to person, and farmers were very traditional and wanting to have the relationship, even though they had it on the WhatsApp. Brazil has by far the largest penetration of transactions happening on WhatsApp by farmers around the world. Now we're seeing AI bots that engage with farmers, that talk about religion, talk about music, talk about the football game score that happened on Sunday. They're there 24/7 and that have a very human engagement and that lower the guard for you to be able to transact. And of course, transact in a much better way than a human because, again, 24/7, you don't forget anything the customer says and you can be much more proactive, bringing offers and cross-sale opportunities, etc. So marketplaces, I believe, will be definitely in the future, hopefully in the short term, one of the big success stories of Latin American agriculture, also leading the way because we're leading in the first two that I mentioned. I think it's a consensus on anybody that understands the industry that in biologics and in fintech financial services, Latin America and Brazil is the number one ecosystem in maturity, in early success stories across the board.
You've also invested in carbon markets through platforms like Moss.Earth. Carbon credits, particularly forest-based credits, have attracted a bit of controversy around issues, additionality and permanence and community impact. What have you learned about quality and integrity in nature-based carbon markets? And how do you think about those risks as an investor?
Yeah, so far we've only done bird. We've lost money on everything that we've done in the carbon sector. So right now we're not very confident. We were just at COP30 participating in the discussions. And I have to admit, I'm still not very confident that the carbon market is there, not only for forestry, but for agriculture in general. I think it still lacks regulatory maturity. I think that when we invested in Moss specifically, we knew that it was going to be one of the biggest risk investments that we were doing for multiple reasons. Primarily, first, we're talking about a new potential asset class. And this asset class, Brazil has probably the biggest potential of providing assets, not only because of the forest or Amazon rainforest, which is one of the biggest sequestration of carbon assets in the world, but also because of our agriculture system that, as we discussed, is very regenerative nature, sequesters a lot of carbon as well. There's a famous phrase by one of the senior people at Schroders that said Brazil has the potential to be to carbon markets today what Saudi Arabia was to the oil industry in terms of being the major provider. That is one of the angles that we saw when we invested in Fund 2, understanding that this would demand a huge risk that this asset class would come of age in standardization and all these other things. And the second is what kind of technology brings competitive advantage and edge to this, whether it's the MRV system or whether it's a ledgering system. In our specific investment, and Moss at the time was a leader in applying blockchain technology for registering carbon credits and issuing what was at the time the most liquid and the most sold carbon credit tokens in the world, MCO2. So it was a bet on two very high potential, high risk volatile categories that crypto technology together with Brazilian carbon assets was going to potentially produce one of the first carbon climate tech unicorns in the space. I think that carbon credits are going through major reputational issues. There were a series of articles written by The Guardian on carbon credit projects in Africa and in Latin America that had a lot of damaging reputations. And I think corporations who are the major buyers of some of these carbon credits are very correct in being concerned on the integrity and the reputational damage that you can do if there's underlying problems. And in Brazil specifically, we've seen things that projects that have been approved by authorities with the stamps and the laws, etc., then years after becoming known that there was fraud at the public levels. So if you go right now and you buy a carbon credit on the Amazon forestry program in Brazil that has all the official stamps from the Brazilian authorities as a carbon trader or as a carbon developer platform, you go and buy this and you have the stamp. In a year's time, you can find out that there was a corruption scheme between the municipal, the state level, and those documents were all frauded. So the moment that there's that kind of risk, it becomes very difficult for a large corporation to justify, because in the end, the headlines will not be that there was a fraud, that you were a victim. I think from a reputational perspective, I think there's a core element that many of the carbon projects are being done in regions, state regions, not only in Brazil, but in other countries and other continents that have very weak public administrations, regions that are very poor compared, they're not done in São Paulo, they're done in Amazonas, in Pará, and other places. Second, these projects demand very long time horizon, so you need a legal certainty of decades, 30 years, 50 years price. And then the fact of the matter is that I think that combination of factors make it a very risky bet. Now, all this said, I think venture capital is about investing 5-10 years before things become mainstream accepted. On the climate struggle, we need to build market mechanisms that will make it more profitable for farmers to implement carbon-friendly practices and for landowners in tropical forest regions to keep the forest standing, right? It needs to be more profitable to keep the forest standing than to deforest. And I think the concept of carbon markets is definitely one of the most efficient and validated segments. I think venture investors need to continue to look and need to continue to study and need to continue to invest in this space. We have seen a lot of maturity coming of age. I mean, the regulatory ecosystem has evolved. There have been a lot of new technologies. So I think we're moving closer to when it's going to be investable. Now we're looking not only as a potential revenue stream for existing companies, but we're also looking for companies that might be native carbon focused as well.
Chico, there's a trend that you call a social abyss, and that is young people who are leaving the rural areas for cities and they're not coming back. You're investing in farmer education and talent retention as a strategic priority. Tell me why this matters so much, and what happens if this trend continues, and what can technology and venture capital actually do about it?
It's actually one of the theses that we're most excited with. What happens is, as farmers have kids and their kids reach educational age, they leave the farm and they tend to go to an urban center that will have a better school or university to get their degree. And this is not only the case for the children of the farmers, it's also the case for the children of the farmers' employees. And once these people leave the farm and they go to an urban center and they invest in other careers, whether in become dentists, doctors, lawyers, across the board, they become very integrated to the urban center lifestyle, in many cases hundreds, sometimes thousands of kilometers away from the farm. and they create a social abyss with the farm. They simply don't come back to the farm frequently. And we noticed this from one of our farm management software investment companies. This became very clear where there's a company called Agro, which has scaled to become the largest FMS in Brazil, maybe one of the largest FMSs in the world. When they called up farmers to be able to sell and distribute software, doing it on an inside sales model, they did a lot of analysis, a very engineer-driven company, a lot of analysis on what are the pain points. And we noticed in that investment that one of the pain points that farmers would complain and that they would see a fit of the product is, well, my son's left and we don't have anything to talk about anymore because we have different interests. And I think this software could be a topic that I can maybe reconnect. I can call my son and I can tell him that I'm thinking about adopting a new technology, a new managerial tool. And this could be something to get him engaged because he likes to talk about technology, but I don't understand what he's saying with the social abyss. So we started to use the social abyss as a strategy to sell FMS. But then we started over the years, we started to think, how can we do something that is bigger, that will solve this abyss and that will bring a lot more value, and then we can create a very large business based on this. There's a rapid understanding from Brazilian population that farming is quickly becoming the most dynamic, the most interesting sector of the economy, that they want to get exposed. A lot of people are even thinking about moving from the urban centers back to the countryside. The cultural side of farming is growing significantly. The agricultural lobby is by far the strongest lobby in Congress. So we see a lot of wins in favor besides all the macro trends that we have discussed before. So people want to go into the sector. It's a very knowledge-dense, science-dense sector. The transformation of skills necessary to be efficient is changing very rapidly. The government, this is a disaster in changing the curriculum. If you're an agronomist and you don't know how to program a drone, you don't know how to interpret satellite data, you don't know how to interpret low orbit satellite data, you don't know how to prompt, you're becoming obsolete very quickly. So being able to have very high quality, well-distributed, fast-changing education, we notice is a major opportunity. So we invested in a company called AgriAdvance that was founded in Piracicaba, which is the Menlo Park of Latin American agriculture. And these kids, they started out with these technical courses, getting some of the elite university professors and building out online courses. And they've started to build out. They've started launching their postgraduate courses. They've launched one of the most successful agribusiness MBAs in Brazil. Next year, they're going to launch their first undergraduate full agronomist specialization courses. They're doing blends of online with offline, where they're setting up student experiences in farms. They just got invested by the corporate venture arm of the biggest farm operator in Brazil, SLC, that operates over 800,000 hectares and is the first farm operator to go public in Brazil. These guys obviously invested because they see the necessity to bring skills and qualification to their own human talent. We see an opportunity to build out the biggest and the best agronomical science agribusiness education platform in the world. Hopefully follow a similar path of going public one day in NASDAQ. And remember, challenges that we fix, whether it's credit, whether it's digital solutions, decision-making tools, logistics, etc. These are all important, but nothing is as important and nothing is as hard to solve as the lack of qualification of skilled labor. And this is in the area that the government, to many respects, monopolizes and underdelivers. It's a huge obligation of the private sector, but it's also a huge opportunity of the private sector to come in and fill this. So this is another investment thesis, Scott, that we're super excited with.
I wanted to ask you about your approach to ESG integration or impact measurement. Do you use any formal framework, or do you consider all of this to be more embedded in how you evaluate every deal because of the nature of your investment focus?
This was one of the reasons why we decided to focus on agriculture. We started out in BNDES. BNDES is a development finance institution. And every investment that BNDES does, and they really ingrained this in our DNA, you need to have financial returns, but you also need to have environmental and social impact. That is core. In the BNDES, the S at the end of the bank is of social. Environmental laws are extremely strict in Brazil, and it's also always been a very core mandate of BNDES. That's why BNDES is now becoming probably the most sophisticated climate finance DFI in the world in terms of volume and operations, etc. So this was always very important for us, and it was always our DNA. Until 2019, 2020, at our Fund 2, we had never really professionalized the process. Then we decided to really take it to the next level. So what we did was we reached out, we hired a headhunter, and we decided to recruit someone that was going to really transform this practice. And we saw that nobody in the world was really doing something in ag tech, especially not in emerging markets, that we really considered a benchmark. So we felt we're going to have to build this out and become a beacon for the industry. So we found a young lady who was a senior environmental engineer at Rising, which is the biggest sugarcane and ethanol operation in the world. And she was building out a lot of these KPIs, sustainability measures. And we invited her and said, look, we want you to build out the most dense, the most robust, sophisticated platform for impact and ESG measuring, AgTech, venture investing. This has to be built from scratch because venture is very different from corporations, it's very different from private equity. So we're going to have to work closely with our founders, other LPs, other industry leaders, learn, implement, and build this out. So we started doing this in 2020 for our fund too, started issuing our impact reports in 2022, and we've been getting bigger. And what we've noticed, Scott, and we always repeat this, there is no asset class, there is no investment category in Latin America for sure, where you can scale environmental and social impact like you can do it in agriculture. Agriculture, and I'll use Brazil as the proxy, it is definitely the biggest offender of the environment. So 69% of emissions directly and indirectly come from agriculture, expansion of the agricultural frontier, poor use of soil, livestock, etc. So unless you're transforming agriculture, you're not really making a dent in emissions. And second, it's by far the most vulnerable, exposed category to climate change. So climate adaptation, if you're not investing in building climate resilience for agriculture, you're really not moving a needle in climate adaptation in our geography. So we started to work very closely to measure these things. So I'll give you the example of our company, Genica, which is the most successful biologics platform in our portfolio. And we believe the most successful biologics platform of this generation. It's a company that hopefully is going to do 30 to 50 times our investment in the next couple of years when we exit this company. This is a company that just in 2024, when we calculated the amount of chemical fertilizers and chemical pesticides that we reduced based on the substitution of using biological solutions, nature-based solutions, we avoided over 800,000 tons of chemicals. So that's for 1 year. The scale that we've been able to deliver on impact and ESG has been incredible. And I think this is reflected in multiple ways in terms of shareholder value created. First of all, we've been able to raise multiple investors that are very focused on the impact aspect of the business. Second, our portfolio companies, once they started to communicate and report this, they've been able to raise multiple investors in this space, so increase the pool of capital. And of course, talent. We've been able to attract a lot of people to the company that consider this very important. So we've been able to attract more investors, more talent, and more capital for the portfolio companies.
You don't explicitly market SP Ventures as a impact fund using all the formal taxonomy and labeling as typical impact funds. But your mission is clearly oriented around food security and climate resilience and sustainability. So how do you talk about impact with LPs who might be more focused on pure financial returns?
Our conversation of LPs always focuses on the financial opportunity of these investments, right? We don't deny that impact mission for us is critical and it's non-negotiable. We will never sacrifice impact for financial returns, but we will also never sacrifice financial returns for impact. We understand that there's a duality, that there is no trade-off. And I know a lot of investors think that if you're going to be impacted, by definition, you need to trade financial returns. For our investment thesis, this is not the case. If we're bringing productivity for farmers, this means we're allowing farmers to produce food with less water, less chemicals, less land, manage uncertainty. So exactly like you said, it's the intersection of food security and the climate crisis, which of course extends way beyond just the climate crisis, right? It extends to global supply chain shocks, such as Ukraine-Russia Black Sea conflict, such as global pandemics across the board, but it strengthens food systems, it strengthens climate resilience. We don't market it as an impact fund, but when we show the diligence that we do and we incorporate impact on every step of the way, it's definitely a very important core value of our business, and we will never negotiate impact.
Looking forward, what needs to happen to unlock Latin American AgTech's potential at scale? If you think about the next 5 or 10 years, what are the biggest barriers to scaling these innovations, and what needs to change in terms of capital or policy, infrastructure, or talent?
AgTech investing is a different asset class than consumer technology, right? For example, the cycles are longer. So we need to have patient capital. This is not a business that you scale and leverage a business in 3, 4, 5 years. The cycles are 8, 9, 10, 11, 12 years. Farmers don't adopt technology all year long. They adopt in specific cycles of the year. They usually adopt small, and then they grow as they see that it works. They take mouth-to-mouth very seriously. So they want to see other farmers use. There's the regulatory curve, getting products approved at the Ministry of Agriculture, with the environmental agencies, with the Food and Drug Administration, etc. Life science takes a while to get the breakthroughs to scale. For you to produce 100 grams of a microorganism is one thing. For you to produce 1,000 tons is a different complete way. That's something that we've spent a lot of time educating our investors to understand, that the cycles need to be a little bit more dilated. I think that's one thing. There were a lot of challenges in the beginning concerning infrastructure, so connectivity, smartphone penetration, digital literacy. And this has accelerated for multiple reasons. I think one was pandemic. It really force-fed digitalization. Another one has been the SpaceX, Elon Musk satellite revolution. And now the third, I think, is AI. AI is simply increasing the usability and the value tremendously of digital solutions. So these three things completely change the speed of digital dynamics and digital adoption within agriculture and agtech. I do think that when we look forward to the world, things in agtech, and this is valid for much of the rest of the world, but in agtech, things that would take 20 years are now things that will happen in 5. And this, for an asset manager that depends on taking money from investors and giving it back and doing it in a cycle where the profits that he can distribute to his team are enough to retain a very top-notch quality team. The first vintages we've gone through, the companies are huge successes. If you look at our biggest challenge over the next 2 years, we need to sell some of the biggest companies that we have from Fund 1 still. These are the companies that are going to become huge outliers. They've already been able to raise capital over the last 2 years at very high valuations, correlated with their multiples of revenue and EBITDA, so very solid businesses, companies that have continued to grow tremendously. And I think this liquidity is the last validation mark that we need to deliver to show that this asset class is truly a unique investment opportunity.
Do you expect that these will be trade sales?
I believe so. I believe when we look at Fund 2 and we look at fintech, we look at university plays that we've been doing, education plays, I think that has IPO potential. When I look at our biologics investments and our digital investments, even though they're getting big and even though they're profitable, they have characteristics that could become IPO material, I think it's such a hot M&A market, Scott.
What's the single biggest mistake you see investors making when they try to invest in sustainable agriculture?
When we talk about climate and sustainability in general, it's really easy to raise a climate fund and in practice be able to invest in anything, because climate is a horizontal investment thesis. So you can invest in buildings, you can invest in renewables, you can invest in decarbonization of industries across the board. And I think when we talk about sustainable agriculture, regen ag, the biggest issue, Scott, is that agriculture demands specialization. It's a very different, unique business. And I think this is an area that investors come in without having this deep sector underlying experience, and that really kills them. I think you need to be specialized. You need to understand the cycles of agriculture. You need to understand the specific fundamentals and the characteristics.
What's the uncomfortable truth about sustainable agriculture that nobody wants to talk about?
I think there's an issue, which is we have more than 8 billion people on the planet. And I think more important than sustainable agriculture is being able to guarantee food security. So the speed at which we transition from the current model to complete, robust, regenerative, sustainable agriculture ecosystem, it needs to be at the speed at which we build the core technological infrastructure so that we don't sacrifice or we don't jeopardize global food security. And I think in many cases, people want to do it too quick. You sacrifice productivity and then you can jeopardize global food security. So I think that's the uncomfortable truth. And that's what we invest in. We invest in being able to build the core infrastructure levers to be able to accelerate this transition without jeopardizing food security. And this is particularly important because as climate becomes more unpredictable, food security becomes a major challenge.
Got a few rapid fire questions for you before we wrap up here. Now, don't overthink these and just give me whatever comes to your mind. And if nothing does, feel free to take a pass. That's okay too. But if you had to name the single most important challenge in the Latin American agri-food and climate tech VC space at this time, what would that be?
Exits. Having people, having strategic investors or public equity markets, giving liquidity to investors and to entrepreneurs, selling the portfolio companies. I think we have great management, great entrepreneurs, huge challenges. I think technology adoption is there, revenue growth is there. I think there's now an early stage investment syndicate base so we can provide capital to these companies, not by ourselves, but also syndicating. But giving the money back to investors and closing the cycle remains to be not only in this specific vertical, but pretty much across the venture capital ecosystem. So a robust exit ecosystem of strategic sales or public markets that give you IPO opportunities, I think is the single biggest challenge.
What do you know now about agri-food tech VC investing that you wish you knew in 2007 when you co-founded SP Ventures?
Being patient, I think, is the biggest learning, understanding that the thesis is very strong and you can't speed up that time. So perhaps I would have suffered a lot less from anxiety.
Now, this is an investor podcast. You don't have to name names, but can you describe an investment you made that you were convinced of at the time you invested that it ticked all of your sustainability and your impact boxes, but in the end, it didn't turn out at all? And what did you learn as an investor from that experience?
I can mention a transaction that right now we're pretty comfortable in saying that it did not turn out. Just Moss, which is our carbon credit development business integrated with blockchain and crypto technology to be able to solve the integrity issues. I think the company was very ambitious. The company was attacking one of the biggest pain points in environmental conservation, especially in tropical agriculture, just creating market-based incentive to keep forests standing and to accelerate the adoption of sustainable practices, including regenerative agriculture and forestry. It didn't reach the objective goals because the regulatory and the carbon markets in the region simply have not taken off for a series of reasons. The company has not been able to scale revenue and to scale financial results. And I think the lesson there, Scott, is if you do not deliver financial results, you do not deliver impact.
And now the converse of that, can you describe an investment that you made and you had some level of skepticism about it, either at the time you invested or actually maybe you passed on it, and in the end, it turned out way better than you thought, and you were pleased you invested, or if you had passed on it, you wish you hadn't? And what was the investor lesson learned from that experience?
I'll go specific on a company we backed called ProMip, which is a macrobiologics technology company. Macrobiologics versus microbiologics is when you produce and distribute larger organisms, such as pollinizers, parasite wasps, predatory mites, that will also become natural predators to pests, right? And when we invested in this company, we had a very clear understanding that when you're talking about microorganisms, the production processes are much more complex, harder to scale. The shelf life of these products are much lower, which in a continental tropical environment in emerging markets, global south, makes it much harder for you to be really effective. And last but not least, the application process, the way you apply it, starting to be able to do it with drones, but it's still much harder than it is with microorganisms or with chemicals, where you have very long shelf lives, where the application process is very similar to traditional pesticides across the board. Well, along the way, and I think this is a major learning and recommendation that I give, advice that I give to all young fund managers, is that things happen, change, and turn out very different than the original investment thesis. And this is part of the game and part of how venture capital works. This entrepreneur, very resourceful, very adaptive, he found a product where he could use his macrobiologic production technology and expertise, but which resulted in a very scalable, effective microorganism to be applied. So these guys using macrobiological technology, which we were not very bullish on the scalability, was able to leverage that to produce a very hard, very important, very effective microorganism that has become one of the most well-known, effective, and blockbuster bioinsecticides in the world. So I would use that example, a company called ProMip out of Piracicaba, founded by two post-grad PhDs with a lot of grit, a lot of entrepreneurial energy, and they were able to adapt and apply their technology to something that was far more scalable.
But at that time you invested, were you skeptical that they could scale it?
I wasn't even skeptical. I was pretty sure that it wasn't going to become a mainstream large biopesticide company. I thought it was going to become a niche. And I incorporated that niche expectation into the price that we came in and into all the early expectations. That was a situation where we were very convinced that it was not going to become something mainstream, but it was going to become a specialty crop, niche crop protection business. And now it's spread out throughout corn, cotton, soybean, and many other major large row crop categories.
Did you learn something that you missed at the due diligence stage that should maybe in the future alert you that, yeah, this won't be niche. This really can go.
I think it's about looking at the big picture and having certainty on the day one that you do not control all the variables, that the market's going to pan out very differently than when you originally looked, especially when you're investing as early as we invest in new major categories. And you need to have faith. If the entrepreneurs are ambitious, if they're technically qualified, and if they are very committed and dedicated, that they can find a way. Entrepreneurs can find a way to make things become much bigger. And that leap of faith is something that I definitely learned in that situation. Once you have those ingredients, the leap of faith is something that venture capitalists have to do. We invest in industries and markets that will become big. They're not big when you invest. A lot of people get it wrong. A lot of people think that venture capital is about investing in very big markets about to be disrupted. And now you're actually investing in markets that still have not happened. I heard Jensen Huang from NVIDIA say exactly these words. The disruptive opportunity was when NVIDIA started out in GPUs, when it was non-existent for AI markets. A lot of people were trying to get into the GPU market now, but now it's too late. The market already exists. Now you have to find the next big market ready to be born. That was a very strong lesson we learned.
So if someone wants to get into the agritech VC investing space, how would you advise them to start, cut their teeth?
First of all, I would recommend having a technical background. I would recommend going a little bit more on the science background, studying agronomy, maybe working in farm-related activities, understanding the day-to-day operation. That's something that is surprisingly absent in most of the investment category. And second, getting your teeth in either an agtech company, VC-backed, or dry powder to make transactions. I think that those are the two recommendations that I would definitely make. There is no substitute for experience in this business, and there is an absence of technical, scientific expertise working in these funds.
Chico, this has been brilliant. I think what you've built has been really important, not just for Latin America, but how we think about feeding the world. And I also think the way you've positioned tropical agriculture as a unique investment opportunity that has unique native solutions is pretty thought-provoking. So you've clearly built something that's very important here. So thanks for taking the time to dive deep with me today. I've learned a lot from it.
Thank you for the opportunity to share a little bit of our journey. And it's been an honor, and I look forward to speaking again.
So before we wrap up here, tell everyone where they can find out all about the great things you guys are doing at SP Ventures and connect with the work that you're doing.
First of all, we're very open. Please reach out. We always answer, whether on LinkedIn, whether on Instagram, or directly through our website. We love to mentor entrepreneurs. We love to connect executives and human capital with our portfolio companies, or we love to simply learn and share our knowledge with you guys. So please do reach out. Again, our LinkedIn page, either my personal LinkedIn page or the company's LinkedIn page, is probably the best path. But do feel free to reach out through a website, through Instagram, whatever is easier for you.
And what is your website URL? What is that?
spventures.com.br.
.br. Okay. And you mentioned Instagram. You have an Instagram page?
We do. We have an SP Ventures Instagram page, and I have a Jardim SPV Instagram handle as well. We're always sharing information and updates on all of these platforms, not only in our portfolio, but also on our team and other market trends that we see happen.
Perfect. Everybody should definitely check out spventures.com.br. Don't forget the .br for Brazil at the end. Otherwise, you'll end up somewhere else. That's for the investment work and to see their portfolio. And then you can connect with Francisco on LinkedIn. I call him Chico. That's what is known by, but that's short in Portuguese for Francisco. So Chico, thanks so much for this. Really appreciate it.
Thank you, guys.
Thanks again. Goodbye, everybody.
You've been listening to SRI 360. If you enjoyed it, please hit the like button and subscribe to get future episodes. You can find an archive of all previous podcast interviews and more articles and information on SRI, ESG, impact investing, sustainable investing, and socially responsible investing at our website, sri360.com. If you'd like to read more lessons learned from world-class SRI investors, get a copy of Scott Arnell's book, Sustainable and Responsible Investing 360. It's a must-read for anyone wanting to know more about investing for positive social, environmental, and ethical impact, all with market financial returns. These are the stories and tactics of those leading the way as sustainable and responsible investing goes mainstream. Sustainable and Responsible Investing 360 is now available in hardcover, ebook, and audiobook format wherever books are sold.